Level 1. Bank teller. The first sound you hear is the money counter. It clicks under the white fluorescent lights, pulling dollar bills through its plastic mouth, while you stand behind a glass window with a name badge on your shirt and a cash drawer under your hands. The lobby smells faintly of paper, hand sanitizer, and old carpet. Your shoes press into the floor as a line of customers waits for you to make no mistakes. This is your first rank inside the bank. You are a teller. You deposit checks, count bills, verify IDs, print receipts, and smile at people who believe you control more than you actually do. An old woman checks her balance before withdrawing $20. A tired worker deposits wrinkled cash from a long week. A man in a suit moves more money in one transfer than you earn in months. You touch all of it. None of it is yours. And as the drawer closes, you start to wonder, how far can you climb before the bank stops using you to count money and starts using you to decide who gets it? Level 2. Customer service banker. Now you are no longer trapped behind the teller window all day. You sit at a small desk near the lobby with a computer screen angled toward you, a phone blinking beside your hand, and a drawer full of forms no customer ever wants to read. The air is still cold, the lights are still too bright, but now people sit down across from you and expect answers. You are a customer service banker. You open checking accounts, replace debit cards, reset passwords, explain monthly fees, and listen while people try to understand why their own money is suddenly harder to reach. At the teller window, every problem lasted a few minutes. Here, the problems sit down, look you in the eye, and stay. A young mother says her card was declined at the grocery store. An older man does not understand why his account balance changed overnight. A college student stares at an overdraft fee that is bigger than what remains in his account. You want to sound helpful, but most of your answers begin with the same quiet sentence. Let me check what the system allows. That is when you start to understand the bank differently. The customer sees a person in a clean shirt speaking calmly from behind a desk. But behind your screen are rules, limits, automated decisions, fee schedules, fraud alerts, holds, and policies written by people who will never meet the person sitting in front of you. Sometimes you can reverse a fee. Sometimes you cannot. Sometimes the customer leaves relieved. Sometimes they leave angrier than when they arrived. And every time they walk away, you feel the strange weight of being close enough to hear their panic, but not powerful enough to truly change the outcome. At this level, you're not just handling transactions anymore. You're translating the bank's rules into a softer voice. But if this is only the voice of the system, what happens when you move closer to the part that decides who gets trusted with money? Level 3. Loan assistant. Now you move away from daily account problems and into a quieter part of the bank, where the carpets are cleaner, the voices are lower, and the conversations last much longer. You are a loan assistant. Your desk is covered with folders, pay stubs, tax forms, bank statements, credit reports, employment records, and signed pages that smell like fresh printer ink. The money is no longer sitting in drawers. It is hidden inside applications, numbers, promises, and risk. At first, your job feels administrative. You collect documents. You scan IDs. You check missing signatures. You call customers when one more page is needed. You make sure every field is filled before the file moves forward. But slowly you realize these are not just files. They are people trying to move into a better life. A couple wants a loan for their first home. A small business owner needs money to keep his shop open. A single father wants to refinance his car before the monthly payment breaks him. They sit across from you with careful smiles, trying to sound confident, while their hands tighten around the paperwork. You do not approve the loans, not yet, but you see enough to know when a dream is already in trouble. Too much credit card debt, income that changes every month, late payments from 2 years ago that still follow someone like a shadow, a debt-to-income ratio that makes the screen feel colder than the room. You learn to say, we just need to review a few more details. You learn not to promise anything, and for the first time you understand that the bank does not only hold money, it decides whether someone's future looks safe enough to invest in. When a customer hands you their dream in a folder, what happens when the numbers already begin to say no? Level 4. Credit analyst. Now you are moved deeper inside the bank, away from the lobby, away from the teller line, away from the nervous smiles of customers handing over folders. You are a credit analyst. Your world becomes quieter, colder, and more numerical. 2 monitors glow in front of you. The office smells like coffee, dust, and warm electronics. Outside your cubicle, people speak in low voices about risk, exposure, collateral, income stability, and default probability. At this level, you do not ask customers how their day is. You study what their lives look like on paper. Credit score, payment history, debt-to-income ratio, available cash, property value, employment length, missed payments, open accounts, closed accounts, warnings in red, approvals in green. Everything about a person is compressed into lines, columns, and percentages. At first it feels powerful. You are no longer just collecting documents. You are interpreting them. You look at a loan file and decide whether it is strong, weak, safe, risky, acceptable, or dangerous. Your recommendation can push someone closer to approval or closer to rejection. Then one file stops you. The applicant has a steady job now. The income is not high, but it is real. The late payments came from a medical emergency 2 years ago. The explanation letter is short, almost embarrassed. You read it twice. But the model does not feel embarrassment. The model does not hear fear in a voice. The model sees risk. Your manager tells you to follow the numbers. That is what protects the bank. And maybe they are right. Maybe one emotional exception becomes a loss. Maybe one loss becomes a pattern. Maybe a pattern becomes a crisis. So you write the recommendation carefully. Decline. Your hand feels heavier than it should. Because at this level you learn the bank's most important skill, turning human stories into financial risk. And once you learn to see people this way, can you ever fully see them as people again? Level 5. Mortgage officer. Now the numbers become homes. You are a mortgage officer, and your desk no longer holds small requests or routine applications. It holds addresses, neighborhoods, school districts, inspection reports, down payments, interest rates, and 30-year promises that can either open a door or close one forever. The office feels warmer now, almost welcoming. There are framed pictures of smiling families on the walls, brochures showing bright kitchens and clean front lawns, and a small bowl of candy near your desk. Everything is designed to make people feel safe. But the conversations are heavier than ever. A young couple sits across from you, holding hands under the table. They have already imagined the house. They know where the couch will go. They know which room might become a nursery. They speak carefully, like confidence might help the numbers behave. As you review the file, income, savings, credit score, existing debt, property taxes, insurance, closing costs, monthly payment. The dream begins to shrink inside the math. You explain the options: a smaller loan, a higher down payment, a different house, more time to save. The couple nods, but their faces change before they say anything. They understand what you are really telling them. Not yet, maybe not this house, maybe not this life. At this level, you are closer to the customer than the credit analyst, but you are also closer to the moment that breaks them. You are the voice on the phone when the approval comes through. You are also the voice when it does not. And the hardest part is that no one screams. Most people just go quiet. They thank you politely. They gather their papers. They leave the office carrying the same folder they brought in, except now it feels heavier. You watch them through the glass doors and realize a mortgage is not just a loan. It is permission to belong somewhere. And if you are the person who helps decide who gets that permission, what does that make you? Level 6. Branch manager. Now the entire building starts to feel like your responsibility. You are the branch manager. You arrive before the doors open, when the lobby is still quiet and the chairs sit perfectly aligned under the pale morning lights. The air smells like carpet cleaner, printer toner, and coffee from the break room. For a few minutes the bank looks peaceful. Then the phones begin. A teller's drawer is short. A customer is furious about a frozen account. A banker needs approval to reverse a fee. A loan officer wants to know if a difficult case can be pushed higher. Someone from corporate sends a report about monthly targets, and the numbers are not good enough. You are no longer just serving customers, you are managing the people who serve them. Your team watches you for permission to be human. They ask if they can help a customer who is struggling, waive a charge, bend a rule, make one exception. But above you, the bank watches different numbers. New accounts opened, loans generated, products sold, customer retention, compliance scores, profitability. You stand between two kinds of pressure. In the lobby, a man argues that one fee pushed his account negative. Behind your office door, a regional email reminds you that fee income is part of the branch's performance. You know the man's anger is real. You also know your staff's jobs depend on numbers that do not care how tired he looks. So you step out with a calm face. You lower your voice. You explain what can be done and what cannot. At this level, power does not feel like freedom. It feels like being blamed from both directions. Customers think you are the bank. Corporate thinks you are not producing enough for it. And when your team looks to you for compassion while the system looks to you for results, which side are you really allowed to choose? Level 7, Risk Manager. Now you leave the branch behind, there is no teller line, no lobby, no customer sitting across from you with tired eyes and folded documents. Your new office is higher in the building, quieter and colder. The windows are larger, but you spend more time looking at dashboards than at the city outside. You are a risk manager. At this level, you do not handle one complaint, one loan, or one family at a time. You watch entire categories of people move through the bank's system. Auto loans, credit cards, mortgages, small business loans, late payments, defaults, fraud alerts, market changes. Everything becomes a pattern. The screen shows you thousands of lives as charts, percentages, and warning signals. One neighborhood starts missing payments more often. One type of borrower becomes less profitable. One group of small businesses looks more vulnerable than expected. Now, the numbers do not cry, argue, or explain. They simply rise and fall. Then a report lands on your desk. Delinquencies are increasing. If you tighten lending standards, the bank protects itself. But more customers will be denied before they ever get a chance. If you keep standards loose, some people may get the opportunity they need. But the losses could spread. And if losses spread too far, everyone above you will ask why you did not act sooner. You remember the young couple from the mortgage office, the college student with the overdraft fee, the old woman checking her balance before withdrawing $20. But here, they are no longer faces, they are exposure, they are probability, they are risk. So you recommend stricter rules, not because you enjoy it, not because you hate the people affected by it, but because the bank has trained you to see danger before you see need. And once you protect the system from people, how long before you stop feeling responsible for what happens to them? Level 8. Investment Banker. Now the money becomes too large to feel real. You enter a different floor of the bank where the carpet is thicker, the conference rooms have glass walls, and nobody talks about overdraft fees anymore. The air smells like espresso, polished wood, and expensive cologne. Phones vibrate across long tables. Laptops glow with charts, valuations, debt structures, and company logos. You are an investment banker. At this level, you do not help a family buy a house. You help companies raise capital, buy competitors, sell divisions, issue bonds, restructure debt, or prepare for deals that can move millions before lunch. The numbers are bigger now. So are the consequences. A company wants financing to expand. Another wants to merge. Another wants to survive by cutting costs before investors lose patience. You sit in meetings where executives speak calmly about efficiency, headcount, underperforming assets, and strategic realignment. The words sound clean, but you know what they can mean. A closed office, a sold factory, a department erased from the budget. Workers who never see the deal documents but still feel the deal, land on their lives. At first, the scale excites you, the suits, the late nights, the catered dinners, the private calls, the feeling that you are finally close to real power. You are no longer asking if one person can repay a loan. You are helping decide where capital flows across entire industries. But the higher the numbers climb, the easier people become to ignore. They disappear behind slides, they shrink into rows, they become costs, margins, liabilities, and market reactions. And when moving money on a screen can quietly move thousands of lives, how far are you from the people who pay the price? Level 9. Regional Banking Executive. Now you no longer manage one building, one team, or one category of risk. You manage regions. From a high-floor office, the city looks quiet through the glass. But on your screens it is divided into markets, branches, customer segments, profit zones, and growth opportunities. Every neighborhood becomes data. Every community becomes a performance area. Every branch becomes a number that must justify its own existence. You are a regional banking executive. Your meetings are no longer about one angry customer or one difficult loan file. They are about expansion, closures, staffing cuts, lending strategy, digital migration, and which communities are worth more physical investment. One report shows a branch in a low-income area is underperforming. Fewer new accounts, lower loan volume, higher operating costs, more cash transactions, less profitable customer activity. The recommendation is clear: close it. On paper it makes sense. The bank can move services online, reduce expenses, and reassign resources to higher growth areas. The spreadsheet is clean, the logic is simple, the savings are measurable, but then you remember what the spreadsheet does not show. The elderly customers who do not trust mobile banking. The workers who cash checks after long shifts. The small businesses that still need face-to-face help. The people who already feel pushed to the edge of the financial system. You ask if there is another option. The room goes quiet for a moment. Then someone reminds you that sentiment does not solve profitability. So you approve the closure. No one in the meeting raises their voice. No one looks cruel. The decision is made with calm faces, bottled water, and a polished conference table. At this level, power becomes distance. You no longer deny one person at a desk. You reshape access for entire neighborhoods. And when a community becomes unprofitable, how long before the system stops seeing the people inside it? Level 10, Bank CEO/Financial System, Decision Maker. Now you sit at the top. The office is silent in a way the branch never was. No money counter clicking. No customers waiting in line. No phone ringing at a teller desk. Just thick glass, polished wood, soft carpet, and a skyline below you that looks strangely distant. You are the bank's CEO. At this level, money is no longer something you touch. It moves through reports, forecasts, earnings calls, regulatory briefings, shareholder expectations, and strategy meetings. You do not approve one mortgage. You shape lending policy. You do not reverse one fee. You decide whether fees remain part of the business model. You do not close one account. You oversee systems that affect millions. Everyone around you speaks in controlled language. Growth, efficiency, risk appetite, digital transformation, capital strength, market confidence. But behind every clean phrase is a human consequence. A stricter lending policy means families who never get the house. A branch closure means a neighborhood loses access. Higher fees mean someone living paycheck to paycheck falls further behind. A profitable quarter may impress investors while making ordinary customers feel smaller inside the system. You look at a report showing strong performance. The numbers are good. Very good. And yet for a moment you remember your first day behind the teller window, the smell of old carpet, the nervous customers, the old woman checking her balance before withdrawing $20, the cash drawer full of money that was never yours. Now the system listens when you speak. But power does not make the room warmer, it only makes the silence heavier. Because when you finally control the bank, you have to ask yourself, did you climb high enough to change the system? Or did the system climb inside you? You begin at the lowest rank, standing behind a glass window, counting money that belongs to everyone except you. Then you move closer to the customer, closer to the loan, closer to the decision, and eventually closer to the hidden machinery that decides how money flows through people's lives. At first, the bank feels like a place of service. Then it becomes a place of rules. Then it becomes a place of judgment. By the time you reach the top, you understand the truth. A bank does not only store money, it distributes trust, opportunity, pressure, and exclusion. It decides who can buy a home, who can grow a business, who pays extra for being poor, and who becomes profitable enough to be welcomed. And the higher you climb, the easier it becomes to forget the faces behind the numbers. So if you were inside this system, what would change you first, the money, the power, or the distance? If this journey made you see banks differently, like the video, share it and comment which system you want to enter next.